I am going to start off, because we only have 30 minutes, although if I could have the timer up to date on the screen, please. We only have 30 minutes, but I'm going to start off to all of you with a quick take. And Samir, I'll start with you and work backwards here. AI infrastructure, venue tech stacks, performance data, fan monetization, all of these words that are buzzwords and they're new. What's hot and what's hype? What's real, what's not, what's going to stick, what isn't? Very interested to know your quick take.
Yeah, thank you. Katie, we've been, I think, discussing even since we got here to Dubai that what's definitely sticking is AI. I think, over the years, and I've been involved with sort of Web3 and blockchain, there's been a lot of buzz and a lot of bad stories, I think, in relation to what sports industry has really experienced. But I think AI is definitely not a hype, it's staying. And I think we're seeing also now with the emergence of private equity in sports and the major investment sort of outfits from the US, from the Middle East, actually coming in and very much investing with the data sort of centric approach to it. I think over the years and decades, the performance, the elite athletes, the power of analysis, going back to Moneyball, going back to all sorts of things from the early 2000s. I think I've been involved with data and tech, where the professors at Oxford University, they've been in AI and ML for the last few decades. I think what people don't realize that technology, AI and blockchain have been around for a long time. And I think we are seeing now the emergence of the investment houses that both invest in acquiring sporting properties, but also investing in sports tech and health tech and everything around those. And I think with the previous speaker from Sports Radar, that it's kind of been confirmed.
Yeah, no, 100%. Deepan, thank you so much for being with us. I know you were stuck in a bit of traffic, so you've made it. Thank you. Your take on that?
I think a big piece, and I think echo your comments on AI, data has obviously been a large part of the sports industry for a long time, but for the first time, we're seeing the monetization of data. We have to remember in sports is a cash flow heavy business, revenue generation business. For the most part, a lot of technology over the last couple decades have not generated a lot of revenue for teams and leagues. We're starting to see that change pretty dramatically. So we're very bullish on the monetization of data. We're spending a lot of time on innovation in and around the world of ticketing, whether that's through blockchain, but how do you enable IP and rights holders to actually own their own ticketing? How do you enable them to actually have ownership, whether through technology that they invested in, that they're building on their own? I spoke to a recent pro sports team in the US. They have 20 people on their team just for AI at this stage. Wow. So there is this idea of, do you build it? Do you partner with it? Do you buy it? I think this is an interesting conversation in sports that's probably going to take shape over the next few years. I would argue most teams should never build it on their own. There's a lot of very good technology and very smart people whose job it is to build technology and infrastructure. But I think this is certainly something that is going to continue to scale and grow over the next few years. Interesting.
Ramsey, coming to you, are you going to jump on the AI bandwagon with the other two, or is there something else that we think is really going to stick around?
So thank you for that. And I definitely agree with the gentleman. But one of the things that really excite me is the creator economy, and then what does that mean in the sports industry? And really, where I see the big opportunity, and we look at it from a software perspective, is what sort of infrastructure is being built that is able to bring ecosystems all together? What sort of software that will enable the clubs to interact with the fans, to interact with the players, to interact with the agents, and to really bring, and of course the advertisers and brands, we can't miss that, right? And really bring that all together. And I think this is one of the big North Stars of what we're looking at in sports technology. We're really new into the sports tech scene. We've done a couple of investments in the creator economy, but I'll give you a prime example of that. Is in a company that is doing infrastructure enablement on digital twins. And how do you support athletes creating a digital twin, distributing that digital twin for advertising with the agents, with the brands, and then obviously connecting it to the clubs and so on and so forth. So I definitely do agree with the AI angle, and I definitely believe AI also fits into this sort of infrastructure platforms that are starting to come out.
I think we all need a digital twin, don't we? Athlete or not.
Don't you have one?
Yeah. I'm going to get one. Ramsey, I'll talk to you. Jamie, thanks so much for being with us. Asking you the same question then. What's hype? What's hot?
Well, I agree with everyone in terms of the headlines and that side of things. I'll take a slightly different spin on it in terms of content and distribution and reach, because I think what everybody will agree with, whatever tech works goes viral very quickly, and other stuff fails really, really quickly, regardless of the storytelling and the hype that goes with it. And actually it's about, okay, how does tech engage with, the passion side of people? And, you can go Oura Ring, Whoop discussions and all the rest of it. I'm team Whoop on that side of things, but apologies to the investors to my right. But it comes down to, that. It's actually about engagement. There's a lot of tech happening. There's a lot of people going, it's our story, and you don't need some of the big, data partners on the planet. You can do this without YouTube. You can do this without, other big partners. And you're sort of like, well, wake up and smell the coffee, because actually right now you can't do it without YouTube. You can't do it without that. Your tech needs to engage with that. And it's sort of my headline to a lot of entrepreneurs is just careful with your own story and believing your own story as part of it, because it might look absolutely fabulous on paper, but in the end of the day, sports and tech is an insider's game, and to break it, you need brilliant people and brilliant tech to make it work.
Oh, I like that take. Christoph, welcome back to the stage. Thanks very much.
Thank you.
Your hot take on that?
Yeah, I can't, I agree with the AI, but as a fifth speaker, I don't want to echo it for the fifth time. So
it would be really boring if you did.
It would be boring. So I go with emerging leagues.
Oh, nice.
I think you see a lot, Tigers League, the Golf League, the TGL, we got in America, really successful. Another one is the Sail GP. I think it's an excellent emerging league right now. Established over the last couple of years. They actually have their final in Abu Dhabi this weekend. So I would go with that.
Okay, that's good. I also want to give a shout out to Baseball United. It's the first ever baseball league that's taken place in the Middle East, and they've actually built a ballpark here in Dubai, and it's amazing. So it's on for a month, so it's fantastic. So those kind of emerging leagues are fantastic. Okay, that's interesting. So I'm really pleased that we did develop more things than just AI, because I hate using this phrase, but it is an adapt or die situation, right? I'm very interested to understand your take, Deepan, on why people should bring in that technology as opposed to developing it in-house. Tell us very quickly why you're so passionate about that thought.
So I think in sports, we have to look at where the revenue falls. Majority of revenue still exists in media rights. So at the start of almost every NFL season, the team owner is getting a $400 million check.
How lovely.
And the valuations continue to climb, not because they're technology companies or not because they have great fan engagement, but because more people watch, and therefore the media rights deals continue to grow.
Yeah.
And so I think when you look at the core expertise of a lot of teams and leagues, it is that they have built the audience. They have unbelievable IP. In the NFL, they say the power of the shield, right? Should focus on what is the core business.
Fair.
At the end of the day.
Okay.
And so if you look at some of the greatest defense companies or data companies, you look at Palantir. Palantir has an unbelievable team that is focused on sports. They're going in with teams. They're diving in so deep into the actual user base, the fan base, trying to help them understand how do we further monetize, how do we... Today, the biggest issue for most teams is fragmentation of technologies.
Okay.
So, some teams are using hundreds of different solutions for all different pieces. From ticketing down to every other facet. So bringing that together, trying to do it in-house is a huge challenge versus trying to use more adaptable solutions.
Can I just add to your point that what's happening in England at the moment, we're seeing in the Premier League and the Championship that actually the club owners are bringing in CTOs and CFOs who are ex-investment bankers and ex-fintech guys. I mean, I also believe, to everyone's point, where the huge opportunity for the sports industry is also fintech and embedded finance. I was actually yesterday on a call to Visa, and both Visa and MasterCard as the major schemes are coming in heavily, not just as sponsors, but actually they trying to use transactions as a conduit to data. And I think when we look at the consumer behavior, and also to Ramsey's point of creators economy and Web3, which is where I really believe there's a huge opportunity. And I think we've seen over the years the kind of relationship between esports and traditional sports. We've seen that one can learn from one another. And because esports is actually attracting Gen Z and Gen Alpha, I think that consumer behavior and the content creation around it, and the fact that now the clubs are looking to launch their own embedded finance solution, because they realize the power of that kind of data versus any other data around fan engagement. I think we're seeing a really good convergence in the whole space. And to sort of Deepan's point, although I've been saying that clubs or sporting properties are now running data companies and tech companies on top of the business of sport, I think there's a huge risk of trying to actually run a tech business with your own in-house teams and developers that will take you away from what happens on the field. So I'm very much pro them partnering up rather than running their own shit.
Yeah, interesting.
Can I just add one point?
Yeah, of course, please do.
I think one caveat to what I said that I think is continuing to scale is you're seeing a lot of multi-club ownership. So you see a lot of team owners who are buying several teams in different leagues. I think in the next few years you will see some of them working across all the different leagues, geographies, actually spinning up their own technology, where they're able to test it across all of their existing IP and assets, and then rolling it out across those teams. We've seen a few of those cases recently. I don't know if a sports team can ever attract talent the way an OpenAI or a Google can. That is the big challenge. But I think they may end up partnering up with large tech companies to build or own some of the tech IP to then be able to scale it elsewhere.
And Dodgers and Lakers being a great example of that.
Exactly.
Yeah, I mean, who knows what's going to happen in the next 5-10 years? I mean, that's definitely on the way. Let's focus more about what we're talking about on the panel in terms of the scaling side of things with these startups. Jamie, let me come to you first. What do you look for, I guess, to know if it's worth investing, right? From a scaling perspective, what is it that you look for?
Well, I mean, obviously, we have a joint venture in Abu Dhabi with Ithara, which is obviously the biggest sports and entertainment company in the Middle East. For those of you who don't know, Ithara runs Formula One next weekend, owns Yas Marina Circuit, Etihad Arena, does all the concerts in Abu Dhabi, owns part of Ticketmaster in the region, et cetera, et cetera. So I think, ultimately, we've got the channels to market to look at. So then it comes down to people at the end of the day, the people and the product side of things. And actually the potential for a winning product in the market from a tech perspective. In our first incubator, we had 4 tech businesses. 3 of them are being showcased at F1 next week as part of it. So that it's something where, but each of them had great people behind the businesses. Because at the end of the day, great people can be also that some of them that had to pivot really quickly with their ideas, because actually, it's something as an entrepreneur. We talked earlier, Christoph and Horst, about resilience and all the different parts of it, and being like an athlete and where you go. You've got to be able to, to look at the original concept and then adapt to the market as part of it. And I think occasionally advice I'd give to entrepreneurs is focus on doing, 1 or 2 things incredibly well. Because if you try and go, we can do the whole data stack, it's exactly Deepan's point that half the companies in sports and entertainment have way too many suppliers anyway, but they've got specialists in different places. So it's about how your tech adapts into that. And therefore, then it's about the right founders, effectively, who, are prepared to look at their plan and go, okay, let's get it in market and prove it effectively, and then build out from there.
Christoph, you look like you want to add to that.
Yeah, no, I just want to echo it. I think like for us, it's like we invested in almost like 100 companies, and the most successful ones, they're all pivoted. All of them, every single one of them, yeah. So I think that's just to echo.
Yeah.
And it goes to strong founders and not it's hard to pivot, right? It's hard to like have a different plan than the original idea, but it's really, really important. So yeah.
No, that's fantastic.
And that's just the final point. Is what I'd say is the pivot is often because sport and entertainment is an insider's game. Everybody else knows what they want, and therefore you coming in and going, "Wait a minute, with respect, you're all wrong. You need to do it differently." It's sort of like, nah, not true. You've got to look and adapt and create the right tech for the partners, and then roll it out from there.
I don't know if it's a very English expression, but you can't square peg round hole, right? You can't just put things in.
Pretty British.
It is very British, isn't it? Sorry, cookie cutter effect. Ramsey, your take, please, on the same thing. Really, what is it that you think we should be looking for if you're going to invest in a?
Look, I definitely agree with the gentleman. It's always about the people. But before we make an assessment on the people, first we try to understand how big is the problem set that the team is going after to solve. And the reality is, in the sports world, tech is just now starting to catch up. It's not at the forefront, and so there's a lot of big problem sets, whether it be the clubs in the UK that were mentioned, or whether it be micro businesses, yoga studios, whatever it may be, right? And how do you bring, new products that enable the company to get closer to their client base and so on and so forth, right? So first and foremost, understanding the problem set. And then second of all, it's really about the people. I always tell my founders, a company is like a living organism, right? And sure, you have your North Star and that's where you want to reach. But in order to get there, it is never a straight line. Like, it's never going to be a straight line. You have to continuously morph. You have to grow your team in a specific area. Then maybe 2 years later, you realize that the team that you grew 2 years ago is almost becoming redundant. And so you need to bring that down, grow in a separate area, so on and so forth. So one of the advices that I give is embrace and be excited for change throughout the journey.
I love that. Embrace and be excited for change that's a great soundbite. Put that on your LinkedIn, quick. We love that. But then, okay, so sticking with scaling then, Samir, I'll come to you as you look glorious in the sunshine at the end there. Let's focus on the GCC region, if you like. How do you know then who to invest within the GCC region that will then be a success globally?
I mean, we're very lucky in London. I was recently attending the sort of Riyadh Investor Mix, and to the guys' statements, I think I always say people buy from people and people invest in people. And I think, I remember many years ago, I asked Professor Grayling, one of the biggest professors and psychologists of Britain, what do we teach kids these days? And he said, actually, adaptability and thinking outside the box. You've got to look at what it is that is in vogue, but more importantly, you've got to look at to what Jamie and Ramsey said, the problem the startups are actually solving. And I think GCC, just like UK, are really particularly good regions to do POC well, because it's sports industry is very, very cliquey. It's very much about the ability of understanding the sports. And I come across lots of founders that actually don't understand in the sports tech, they don't really understand sports industry, don't have anyone on the board, on the team who comes from a sports background, which is, the emergence of athletes and investors and founders is actually very refreshing to see, because to the point of earlier on, Horst and Christoph talking about that grit, the resilience that athletes have, is something that when I'm looking on behalf of the family office or private sort of investment portfolio, I'm looking into these characteristics that the founders have. And I think GCC is now playing a huge role from the investment viewpoint outside of the region. And as for the region is concerned, again, really well linked to Europe and the UK. I mean, we've come across the likes of Lovables and the unicorns coming out of Europe in a record time inside 2 years, where it used to be 7.2 versus Americans of 18 months out of Silicon Valley. I'd like to think that GCC will be able to rival the American and European startup and scale-up ecosystem, as long as they get the sort of support of important players on the ground here. Because what I would do if I were a founder here, and that's what we're looking for when we come to trips like to Riyadh, Abu Dhabi, and Dubai, is to find these startups already integrated into the sports ecosystem here, and then apply their solutions to the US and the European market, because that's where the sort of opportunities of growth are really happening, and that's something that's always exciting for me.
Jamie, you're nodding along there in agreement, I hope.
Yeah, 100%. No, I mean, I think it's right. I mean, look, I think we're going to see out of this region some great sports and entertainment businesses that'll start here and go global. If you're in consumer world, then Dubai is one of the best proof of concept places in the world from that point of view, for numbers and just the viralness of Dubai, of what's hot and what's not. You know, it sweeps through everything. I think Riyadh is exactly the same. You know, in terms of major events and infrastructure, then Abu Dhabi is your place from that point of view. So it's one where I think the GCC offers a lot. You know, from a POC perspective and from a capital point of view. I think it's interesting that, you know, obviously on the panel here, we've got a lot of world-class international investors that are here coming and going, we need to be here and we need to set up a base, you know, and we need to be part of this, which is, you know, the sort of change, because previously it was they would have all have been in New York or the Bahamas or wherever it might be and said, you can come to us, as it were, type thing. And they did at that stage, the UAE did. But I think it's something where that's the big change. It's right now, you know, I think here in Dubai, you know, you look at, you know, what's happening with planes taking off there and the skydiving, what Dubai has done for skydiving effectively. You know, is it the best skydiving destination in the world? Probably right now. It's certainly the highest profile. And I think you're going to see more, you know, made in Dubai, made in Abu Dhabi, made in Riyadh and exported to the world. I think that's going to be a trend over the next 10 years. And tech plugging into that or leading that 100%. If you look at what Abu Dhabi's invested in AI, incredible. Riyadh's doing the same. Everybody's going to benefit from it. So, yeah, I think it's an exciting time for the region.
Just like to emphasize on a change. I think like 2 years ago, everybody came to the region basically to get capital out of here. Okay. Last year, like it changed into, wow, I'm a startup and I should be in a region. And I think now you see like a real ecosystem. You see like real startups out of the region.
And you think that's happened in the last 2 years alone?
It was a little bit before, but a big change before. So it was like getting capital out was the past couple of years. Then it was like, wow, I need to be in the region with my startup from US or wherever. And now you actually have a lot of startups in the region, right? So, and that changed.
I mean, that's all. Anybody that's based here in the UAE would know. We've just had some recent data and statistics of like 17,500 people last year alone moved to the UAE. So I think it's something like our population has grown by like 1.1 million in the last year and a half. Asking you the same question then, Deepan, with regards to, you know, how do you know what to invest in the GCC that's gonna go global?
I think the way we try to look at the lens here in the region is not sports or sports tech, it is entertainment. Sports is a subset of entertainment at the end of the day. It happens to be one of the buzziest and sexiest elements of entertainment. And therefore, when you're in an entertainment-driven country here, and obviously increasingly in Saudi and others, it's a lot of kind of captivation where you have founders who are perhaps not from the region but are moving here to build. Taxes help everything when you're trying to build and you understand that over time you want to exit the business. I also think it's becoming far more attractive to bring talent to the region. So we have 2 investments in UAE, neither of which are actually residents of UAE themselves, but are founders that moved here. And they have found that it is increasingly much easier to attract really top talent in the region. Certainly much more so than it was 4 or 5 years ago. I think a lot of the credit goes to the royal families of each of the countries who have made it far more attractive, easier to raise a family, safer, a lot of these elements. I also think at the end of the day, we tend not to invest a whole lot into companies that are selling to teams or leagues. Reason being, we think that it's not that they can't be successful businesses, but a lot of times it's much more challenging to build a very, very large business. How many end customers do you really have at the end of the day? And so the way we think about it is, what properties can you build either in India that you can bring here? That's been like, if you look at the investment profile in the region over the last 4 or 5 years, it's very much been you build a lot locally. You try to bring companies from other countries to expand here. We haven't seen a lot, but I think what we will see is, I think Jamie alluded to, is this will become an exporter of really phenomenal technology and innovation to other markets. We're already starting to see both of our companies actually that we invested in here, majority of their customers are not in the GCC. They're actually in the US, India, Japan. And so I think you're starting to see the more talent you can attract, the more global solutions you
100%.
can build.
And also, all year round sunshine kind of helps. And tax-free living, yeah, absolutely. Ramsey, you gave a big thumbs up there.
Yeah, I couldn't agree more. I mean, I think the UAE does a great job in attracting top talent for the reasons that were mentioned, but also because they're so forward-thinking in how to adapt their laws, regulations to accommodate these entrepreneurs. One of the big examples is trying to be one of the blockchain capitals of the world, right? And they were very forward-thinking in maneuvering around that, right? And so exactly to your point, one of our startups actually, a company called Sixer, which is doing an arcade game style for cricket where fans can engage with top talent and top players and play the game online. And there's a full tokenomics behind it. And so they decided to move to the UAE, set up their company over here, because the laws and regulations are attractive, and naturally, like you said, the vast majority of cricket players are all over the world, in South Asia, in Australia, and so on and so forth. So definitely a great hub for founders to move.
Katie, just to add what I find fascinating, when I was a chairman of the football club that was turning 100, I ended up talking about next 100 years, and was ridiculed in the media that there's the chairman who talks about next 100 years, when I often talk about the fact that whether you own any sporting property, you're only custodian of it for a short period of time because they've been around for 100, 150 years. Now, Vision 2071 is something that makes this country and its leadership unique. And I think for any investor or anyone that actually wants to come into a relatively new region, you have to understand who's in power and actually the benefit of being in power over a long period of time. Obviously, in Britain, we've lost 11,000 millionaires in the matter of months because of the Labour non-dom tax issues that we literally, many have benefited. Dubai has massively benefited from that. But in Europe, we have a problem with governments. We have a problem with political parties that are actually in there for a relatively short period of time. Whereas, they go around, criticizing the regimes like over here. But in actual fact, when you know that you don't have issues, but you can have a strong vision, that changes the landscape and the playing field when it comes down to investment, startups, scale-ups. So they can go incredibly fast. No European country really compete or anywhere else in the world, which is why I think we're all quite bullish. We're in it for a long haul. I mean, I've set up a sports ventures with the royal families from the Middle East to acquire football clubs in England and Europe. But the idea is a 20-year-long vision. The idea is about the sustainability, the fun engagement, the social impact, the education, the real estate, the sort of real impact beyond the business of sport, which is those over here really understand. I think in Europe and America, it's fast-paced, it's a quick buck, and lots of flipping. So I think this is what makes UAE and MENA region different to the rest of the world.
That's amazing. That was another one for your LinkedIn post right there. Listen, we've got a couple of minutes left. I'm going to go across the board here, Christoph, starting with you. Given the audience that we have here, and of course anybody that will be watching on social media, what are the traits that you look for in startups? Traits that you repeatedly back? Starting with you.
So again, I go to the founders, straight on. I think what I mentioned before is the startups itself, the strategy often it pivots, but we're looking at the strongest founders we can find, and we don't worry about the pivots.
A bit of a one-off question before I ask the same question to you, Jamie. Is it a case then that, what about on a personal level? What if you just don't get on with the founder? Is it not something you're going to back?
Well, I think it shouldn't be like one-on-one. I think like you
Right.
always like have like an investment committee or like a bunch of friends, and you like working with a startup. So there shouldn't be like
Makes sense.
one person decision.
Makes sense. Okay, Jamie, asking you then, what are the
Yeah, I
traits?
mean, look, as I said earlier, it's about people. I would also say that.
But is there a specific trait? Sorry to interrupt you.
Yeah,
as opposed
it is. I mean, there's a track record of the why, and then there's the piece of the how, which is usually about, can they execute, and do they have the resilience to get through it? Because it's not going to be, here's our plan, we're going to do A, B, C, D, E, F, G. Guess what? W might come straight into play, as it were. So that's just, you got to adapt to the plan along the way. So the other bit, as a final bit, is just keep it simple. Because most founders in early stage can overcomplicate. The good ones get it early and they go, focus on this, and then we've got an opportunity to do the other components.
going back to your point of do one or two things well, focus on that. Ramsey, coming to you.
So, I think grit plays a big role in
Grit.
Grit,
Okay.
yeah, plays a big role in what we look for in founders, and their ability to really toughen up and go after it and be able to, pivot when it's necessary. And I completely agree with everything that was said earlier, but also having the ability to really think big, right? Really think of not building just a product or a distribution platform, but really think of the entire ecosystem around what they're building and how can you solve for different components on that ecosystem. Because, when you're thinking that big, and if you capture, let's call it 20% of an ecosystem rather than 100% of a specific product, your size just becomes that much bigger.
Makes sense.
So,
Okay, fantastic. Deepan?
I would say in our history of our fund, we've been around for about 10 years and invested in about 120 companies. The most successful companies that have exited have almost always been non-consensus. Anytime we've invested in something where everyone around the table was super excited about and thought we should absolutely do it, it almost hasn't worked out. And
That's so interesting.
I think the logic is, one, you have to back entrepreneurs who are a little bit out of their minds. If to start a company and do something for 10, 15 years, you have to think differently. Entirely. You have to be wired a different way. I mean, I would tell you, when we first seeded when we led the early rounds in The Athletic, people thought we were crazy. We could not raise capital for the business. Almost all VCs passed because they were like, there's ESPN, there's BBC News. Why do you need more content? Same thing with StockX. When we backed it in the first round, people were like, sneakers are too small. Nike will eat you. Like, it has to be the will of a founder plays a large part in obviously everything we invest into. But around the table, if every other investor is like, this is the hottest deal in the world, this is going to be wildly successful, at least in our history, it has never worked.
I'm gonna definitely misquote this. I think it was Estee Lauder that said, someone told me there's already makeup on the market.
There you go.
And she was like, okay, and I've probably got that wrong. Don't put that on your LinkedIn. Samir, ending with you, please.
So I'm going to be a little bit different to the rest of the guys. As a former political refugee and immigrant, former elite athlete, former entrepreneur who pretty much scaled and exited, I always felt that entrepreneurs of today ought to be a great deal socially responsible about social impact, about compassion and empathy. I think the 21st century leadership is no longer about driving it in a very competitive red ocean way, but going into the blue ocean environment, doing collaborative way, leading by example, getting down with your workforce, with your teams, and showing how it's really done. So rolling up the sleeve. And, I've been controversial in saying over the past few years that the VC model has been broken for a long time, because I think if you look at the last 25 years in terms of the IRR and LPs and their dissatisfaction with it, we see why, which is why certain VCs that actually have got GPs as a former operators, former founders that exited, the athletes coming in seem to be actually delivering different results to the, Christoph's and Jamie's point of grit resilience, perseverance, and commitment, of course, you look for that. But if we look at founders who come with a story, from a background of, often immigrants, women entrepreneurs coming out, a women's sport coming up, like, unbelievably exciting space. I look for a little bit more than what sort of traditional investors look for, perhaps because of my own personal journey, but also perhaps from the experience that I've had over the last few decades. And running seventh generation family office, I'm the first generation that's gone away from real estate and commodities by bringing emerging technologies and bringing sort of crypto hedge funds with the Rothschilds into the family office ecosystem, which is, I think, why family offices are going now more direct in terms of the investment because of the domain expertise, rather than basically plowing money into the VC ecosystem. I think the combination of it all makes it sort of exciting for the next period.
And that is exactly why we have people like yourself on the panels. So with that, we've run out of time. Samir, Deepan, Ramsey, Jamie, Christoph, ladies and gentlemen, a round of applause for a fantastic panel. Thank you very much indeed. Thank you.